guys, welcome to this Moneycontrol live stream. I'm Nandita Khemka. Well, we are counting down to the RBI's monetary policy decision tomorrow, 10 a.m. and no surprises expected with respect to interest rates. But what else can we look forward to when it comes to the RBI's decision tomorrow? To put that into perspective, I'm joined by Latha, Venkatesh here. As and when we have RBI monetary policy or growth figures, we always turn to Latha ma'am to really put into perspective what to expect. So this time around, Latha, it's more to do with measures surrounding liquidity more than rates, right? Because Street is anticipating a status quo once again for the 5th straight time. But let's talk about the stance as well. Is there any chance that the RBI may change its stance to neutral?
Well, when we got that 4.9% inflation reading in October, there was at least a hope that if things fell dramatically, because you did see a dramatic fall in tomato prices, the one that was the culprit, and if onions also followed suit, the expectation was that maybe at some point in time that they could turn. But at that time, we still had a lot of uncertainty on the global environment. Now, yes, crude has come down, a little emphatically below 80, who is to say how long it will last, but it's come down. And likewise, US yields have fallen almost 1 percentage point from almost 5% when the RBI last met to 4.1. So it does look like there are still compelling reasons for the Reserve Bank to perhaps at least indicate that it does not have to be tight, that it does not have to give a more hawkish policy. But the chances are that the Reserve Bank may not go down that path. And my sense is that there are two very good reasons for it: growth and inflation. Growth is very fiery. And when growth is so good, most central bankers fear that it can increase inflation. After all, when you're earning more, you're likely to buy more and push up prices. So there is growth per se, especially when it is higher than the normal, higher than what you call potential growth, but I don't want to go, it's a jargon word. But when it's higher than potential, it's possible that you're pushing at the boundaries of total capacity, and therefore people will start raising prices. Because of the demand. That's the interpretation that high growth can give a central banker. The second big reason is that food inflation is likely to spike from here on. That 4.9 was a low for the near term, and we are seeing it in pulses. Pulses have been very expensive. Cereals, I mean, bread and butter, staple diet for all Indians, is ruling. The mandi prices are far above MSP prices. So procurement has not been that good. And that again will feed into high inflation. So this is no time for the Reserve Bank to say that they can relax.
And you mentioned growth, of course, smashed estimates, even RBI's estimates by a wide margin. 6.5 RBI was predicting for the current fiscal, coming at 7.6. Any chances of an upward revision in FY24 growth figures? And if yes, by how much is the economist community actually looking at?
Actually, very good chances, because if you just arithmetically put the Reserve Bank's numbers, what they gave for each quarter, then if you have to come to 6.5, you have to increase, assuming that the other two quarters that they gave, which was 5.7 for the fourth quarter and 6% for the current quarter, assuming this quarter is 6 and next quarter is 5.7, even arithmetically you have to bring it up to 6.7%. There are some people who believe they may not be that aggressive simply because, there is a deflation reason why this number is up. The way the NSO deflates, instead of double deflation, they do single deflation. Without getting into the technicalities, the Reserve Bank could be less impressed by growth than all of us are. And therefore, it's possible that they only go up to 6.6 and not too much. And also, you must remember, nominal GDP is also lower. So it's possible that they will only marginally tinker up with it. There is a minority opinion which believes they will stick with 6.5.
6.5, okay. So that would not be, I think, taken very well with the markets, because the kind of figures that we saw, 7.6, I think there is a general perception that, it would be revised at least, higher by a slight margin. If not
it's possible. Maybe, like I told you, it's a minority which believes that the Reserve Bank will be cautious. The majority believe that they will go with the arithmetic and do 6.7.
6.7. Inflation, you mentioned, of course, we have seen pulses prices and, vegetables also, I think,
Yes.
starting to inch up now. I was just watching some of your interviews, earlier interviews. Some economists have pointed out that inflation could once again head towards 6% for the next 2 months. In that sense, what happens to FY24 inflation forecast A? And any chances of the first quarter FY25 estimates to be revised higher? Could we
For the
expect
next,
that?
that's 5.2 at the moment. It's a fairly big margin the RBI has given itself. And this is food inflation. So the Reserve Bank may want to wait and see if the monsoon forecasts for next year are good, then that 5.2 may still hold, because much of it is also psychological. If you know you're going to get a good monsoon, prices, traders don't push up prices. The Rabi harvest, the Rabi sown acreage is less than what it was in the same time last year. That is another reason why people are a little worried about how the procurement will be. If procurement is less, then traders will still have a tendency to push up prices because the government stocks are not that much. Therefore, it is a bit dibbly-dobbly. I'm not expecting them to raise the, or at least no one is expecting them to raise the inflation forecast. See, even for the current quarter, October, November, December, the average is supposed to be 5.6 according to their forecast. Now, the first month, October, was only 4.9.
4.9,
So, even if this goes towards 6, we can still be maybe instead of 5.6, 5.65 or 5.67. So, the Reserve Bank need not have to tinker with every, 5 basis points. They may let it be. They may not tinker with it.
Right, let's talk about some of the liquidity measures that RBI announced but didn't really take recourse to. It's the OMOs, the much dreaded OMOs, so to say. But do you think any such measures, will the RBI governor indicate as to when they will, take recourse to these OMOs, or any other liquidity tightening measures that one should expect now?
See, an OMO is clearly done when the market has so much money that it is depositing on a daily basis in the Reserve Bank's reverse repo window. That never happened. It was expected that there were big bond redemptions in the first week of November and last week of November. The Reserve Bank calculated that at that period there may be excess supply, and so they may have to do OMO to absorb it. But that never came to be. The market remained in slight deficit. The deficit moved into very slight, but it remained a deficit. Now, when already the banks are coming and asking RBI for money at the repo window, what are you squeezing out? It doesn't make sense. So the OMO, the reason for an OMO did not fructify. But I think the RBI will reiterate that it will always keep OMO as an option, because going forward, because of the election result and the GDP number, we are seeing equity inflows which were outflows turn positive. The global environment has also turned EM positive. When US yields are at 5, it is EM negative. When US yields go to 4, it becomes EM positive. So there is the big bond index inclusion. So when that much money comes in, the Reserve Bank will want to say that we are keeping the OMO option on the table. But an OMO option, because of dollar flows, the market will be okay. An OMO to be done just to squeeze out existing liquidity, that scares the market. That is the question mark. What will the RBI say on that? Will they continue to say that, will they sound very hawkish on inflation and on liquidity? For me, that's a question mark. I'm really waiting to see. The street is divided.
Right. Last question really, the rate cut timeline. We know that, one section of the market is talking about an early Fed rate cut. Even the Fed, the CME Fed Watch tool is indicating 5 rate cuts for next year till December 2024. I was talking to an expert. I had to ask him twice if this is what he means. So in that sense, some of the economists are expecting that Fed could look at a rate cut as early as April, May. If that happens, of course, RBI perhaps would follow suit. Whoever you spoke to till now, do you think there is a chance of a rate cut by April or May, or do you think it'll be happening post June, which is what most economists said last time I spoke to them?
I think we got 10% of poll respondents saying that it will happen in the first half of next year. First half of next year is actually before September. A large number actually said second half of September. So the start
Really
of the
so I
don't think there is any expectation by April, May, June. June, there may be a very, very small minority that would be expecting. There could be a few more people in August, but a bulk of them expect October. Yes, I agree that if the Fed cuts, the situation will change.
Yeah.
But at the moment, as you pointed out, the first quarter forecast itself is 5.2. Now, unless the Reserve Bank is able to definitively say that we are going towards 4 point something in the second quarter and the third quarter, I don't think they will go towards a cut. So we have to watch around. Already, the chances are they will give us the second quarter forecast in the coming policy, because they usually give 4 quarters ahead. So they are likely to give us that quarter's number. If that comes below 5, then your hopes can go up a bit. But a lot of people believe that in the second half of next year, inflation will actually spike.
Okay.
In end next year. So I'm not very confident. Even those who are talking of a cut are talking of at best 1 or 2 cuts.
Okay.
So instead of 6.5, it will be 6. So I think it's a very premature conversation.
Yeah. Okay. Well, so that's the message then. Status quo on rates for the 5th straight time. We'll be watching out for what he does with the stance. Aside of that, any liquidity measures is something, we
there
will
is
be,
that
of course,
one point of the risk weights on unsecured loans.
Yeah.
See, you have just announced it a month ago. It's unlikely that they will
do something
some
out
more
of the
for
syllabus.
one more item.
Haan.
Like there are people talking about MFI loans being very highly priced and whether the RBI will move against it.
Okay.
But you've just announced something. I think they'll wait for a few months to one set of results from the banks to see whether it's having an impact. But technically, as a reporter, for me, those are the things I will watch out for. What does he say about the impact of the risk weight? Will he do any more on any other vertical or more on the same vertical? And secondly, whether he is worried about inflation as much as he was last time, and therefore will he tighten? It's quite possible that they don't want growth to be becoming a cause for inflation.
All right. So that's the expectation. Of course, I'll be touching base with Latha tomorrow as well at 11 a.m. After the RBI's policy decision announcement. But for now, I think we are done with this discussion. Thanks a lot for tuning in. But of course, tune in tomorrow morning at 10 a.m. when we start our RBI's live coverage on Moneycontrol. So I'll see you there. But for now, it's a goodbye from me and Latha. Thanks a lot for tuning in. Stay tuned to Moneycontrol for all your other news and updates.